All right, let's talk about a trading strategy that sounds super complicated, the Iron Condor. But here's the thing, we're going to break it down so simply you'll feel like you've known it forever.
Okay, to get this, I want you to just imagine a really simple game. Picture this. You've got a toy, and you make a little bet with your friends.
And the deal is super simple. If that toy stays right there, in the middle of the room, and it doesn't wander off too far in any direction,
Then boom, you win. That's it. If it rolls too far to the left or way over to the right, you lose. And believe it or not, you've just grasped the entire idea behind the Iron Condor strategy. Okay, let's really run with that idea. We'll call it the playground analogy, our first core concept for getting this right.
okay, let's make this official. Think about a playground, and you've drawn this big safe zone right in the middle. The only rule of the game is you win if the ball stays inside that zone until the clock runs out. Simple as that.
And really, that's it. When we take this idea into the world of trading, the concept is exactly the same. An Iron Condor is just a bet that the price of something, a stock, crypto, whatever, is going to stay inside a specific safe zone.
All right, so how do we take this from the playground to the real world? How does this bet actually work with real prices in the market?
Okay, let's use a real-world example to make this stick. Imagine the price of Bitcoin is just hanging out, right around $70,000. You're looking at the market, and you're thinking, you know what, I really don't see it making any crazy moves up or down right now.
So this is where you get to draw your own safe zone. Based on that feeling that the market's kind of chill right now, you set your boundaries. You might look at it and say, okay, the bottom of my range is 65,000 and the top is 75,000.
And just like that, the deal you're making with the market is identical to our little playground game. If the price of Bitcoin hangs out between your two numbers by a certain date, you win. Simple. But if it breaks out, goes above the top, or drops below the bottom, then you lose.
Okay, so how do we actually make this bet happen in the market? Now, this is the part that sounds all grown up and complicated, but trust me, it's really just about building some defenses. The core idea is just as simple as everything we've talked about. So this is how the Iron Condor actually gets built. You're basically making 4 options trades all at the same time. But don't let that scare you. Think of it like you're setting up 2 fences, one on each side. On the high side, you sell something called a call. That's basically a bet the price won't go above that point. Then, for protection, you buy another call even higher up. Think of that as your insurance policy. On the low side, you do the exact opposite. You sell a put. That's a bet the price won't drop below that point. And again, you buy another put even lower down as your safety net. And those 4 things together, that's your fortress.
When you boil it all down, that's all those 4 trades are really doing. You're not just crossing your fingers and hoping the price stays in the middle. You are literally building protective walls on both sides of your playground.
And when you put those 4 trades together, this is what you get. A clearly defined profit zone, right there in the middle, totally protected by the walls you just built. That's your sweet spot.
All right, now for the part everyone wants to know. How do you actually get paid? And, more importantly, what's the catch? Let's talk about the payoff and the risk.
Okay, this is one of the coolest things about this strategy. You get paid the second you place the bet. Seriously, this money, it's called a premium, goes straight into your account. What you're really doing is selling calm insurance to other traders who are betting on a massive price swing. They think it's going to go wild, and you get paid for taking the other side of that bet. So once you've collected that premium, all you have to do is wait. If you are right and the price just chills out inside your range until the trade expires, you just keep all the money you were paid up front. That's your profit. Done.
But what if you're wrong? This is absolutely crucial because you built those protective walls, that insurance we talked about. Your risk is not unlimited, not even close. It's a controlled, defined amount that you know from the very, very beginning.
Okay, so now you get how it works. But the big question is, when would you actually want to use a strategy like this? Well, an Iron Condor is basically the perfect strategy for a boring market. It loves it when things are calm. You use it when you're not expecting any huge, dramatic price moves in either direction. It's really a strategy that's designed for those times of low volatility and stability.
So if you want the absolute simplest, most direct way to define it, here it is. An Iron Condor is a strategy where nothing happening is the best possible outcome. You are literally getting paid for the market to just sit there and do nothing.
Okay, let's wrap this all up. The key things to remember are super simple. First, an Iron Condor is just a bet that a price will stay inside a certain range. Second, you make your money if the market stays kind of boring. And third, and maybe most importantly, because of those protective walls we talked about, you always know your maximum possible profit and your maximum possible risk before you even click the button.
And that really leaves us with a final question for you to think about. Now that you understand a strategy that profits from stable markets, which do you prefer? Are you the kind of trader who loves to chase big, exciting trends, or do you see the opportunity in profiting from those quiet sideways markets? Something to think about.